Well, let's get started. So if we go onto our Forex Factory calendar, as we can tell today it is Tuesday and my time 4 p.m. we got FOMC member backing speaks, right? As you know, FOMC, NFP, CPI injects a lot of liquidity into the market. So let's watch for this out. Next is let's deeper toes into EURUSD because the FOMC affects the dollars market. If I go start on the monthly time frame, because I'll be doing top down analysis. Nice. So monthly time frame, we can tell. Hmm, what should I say about this market? Let me show a demonstration. We were bullish. We went high. We had a little retracement to continue high, but we can tell this previous month just respected that swing high right there. But what's our direction on our current month? I would argue our current month will give us a bullish scenario. Why? Because I would argue that this previous month just closed above its previous month, though we had sweep liquidity right there, so that shows some of retracement. Then this argument goes into a 50-50 scenario. 50-50 scenario means that I'm either bullish or bearish, and I will reduce my risk if I take an entry, right? Nice. So currently I would argue I'm bullish. So let's go down time frame weekly. Sheesh, I would argue, let me do this easy. Weekly, we can tell that this week we are bearish. As you can tell, its previous week just respected or swept the high of the swing high right there, which is quite easy, right? So this week I'm bearish. Crazy. So we have a further gap right there, which means the price might retrace back off of that and continue high, or might just reject and not respect that further gap. But I would argue currently I'm bearish on this week. Ah, nice. So as we go down time frame daily, wow. So we have this sharp turn, meaning that sharp turn we have a fair value gap and a fair value gap out. That's a fair value gap into a swing point. What is that? Here, a fair value gap into area of liquidity, swing high right there, and a fair value gap off of that. That shows a sharp turn, right? So this shows that today, as today Tuesday, right, we are bearish. If we are bearish, where are we heading to? We are heading to the next pool of liquidity. Where's the next pool of liquidity? It's this swing low right there. So I'm bearish up to this swing low right there. But we all know that we have fair value area. What's a fair value area? A fair value area, I don't know. Crazy. So this is a fair value area right there. Which price might retrace off of this and just push the price high, or else price might go down to this swing low, pool of liquidity, and continue high. You never know, but I'm bearish on this day. Let's go down time frame then. If I'm bearish, if I were to continue low, where should price go first and then continue low? I would argue price should go first onto areas or points of liquidities. Those are swing highs and fair value gaps. Let me show you. We have 4-hour time frame to which we'll be looking upon that swing high right there. No, that fair value gap right there on 4-hour time frame. So if price want to continue low, it should retrace back off of this and continue low. But I can tell off of this candle, nah, we won't reach there. We might due to the news injecting liquidity, but yeah, supposedly we have this swing high right there, which has not been confirmed yet, right? Because if you check, we have 2 hours to go to confirm this swing high. Else, get rid of that. Leave that fair value gap right there. So we go down time frame 1 hour. On 1 hour, crazy. On 1 hour, it's crazy. On 1 hour, we have this swing high right there, to which price might retrace off of that and continue low, which is okay. But we have fair value gap right here, to which price also might retrace of this fair value gap and continue low, which those are 2 case scenarios. But if you know there's something called flood, load, and load, is that old, right? First line of defense, second line of defense, blah 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 blah. Yep. So we have a fair value area right there, to which price might also retrace right here and continue low. So what am I looking at? I'm looking at two case scenarios. First is off of 4 hour time frame. That means this FEG favor gap right there to hold price and continue low. Else, if price doesn't reach that 4 hour FEG, then price should utilize this 1 hour FEG or this swing high right there for price to continue low. And that's it on Euro USD. But before we go, I should showcase those scenarios. Like, yep, where? Like here. The other one should be off of that. And come on. Like there. And the last one is off of that. Pep, pop. Yep, and that's it. Bye.